Hello and good evening, everyone. Welcome to another very exciting round of Paytm Money Talk. And today's talk is going to be really very interesting and exciting as well. You know, what's the name of the topic today? It's a small to mega mastering the art of small cap investing. And we've got a very interesting guest today, and his name is Mr. Chandraprakash Padiyar. So he is basically a fund manager from Tata Mutual Fund. I'm Neeraj Gogoi, host for the talk, and this talk is powered by Paytm Money. So all of you know that currently the flavor of the season is the mid cap, small cap, and the micro cap. They're having a fantastic rally. In fact, on the other hand, a Nifty, Bank Nifty doesn't only move, but these indices they don't stop moving, right? So that makes and lots of questions, lots of excitement, lots of inquisitiveness among the small cap investing is there. No doubt, it's a little bit the profile of investing is completely different than large cap. So we are going to understand all the pros and cons, who should invest, how should we invest, how should we select the right small cap fund, and how much of our portfolio. There are so many different questions that we have. So we discuss all these questions today in our Paytm Money Talk. But before that, I would very quickly like to introduce what the Paytm Money Talk is all about. So Paytm Money Talk is an endeavor where we try to bring in new ideas, new concept. We get an expert from the industry with decades of experience and try to get an insight. How can we improve our investment game? And we have been doing it for last 2 years, and we are getting lots of support from the audience, and we hope that we'll continue doing so. So yes, that is the Paytm Money Talk is all about. So before I start, I'd like to request my team to play the film. So welcome back, guys. So let me introduce my guest for today, and his name is Mr. Chandraprakash Padiyar. He is a fund manager with Tata Mutual Fund. Mr. Chandraprakash joined Tata Asset Management as a senior fund manager in September 2018, and previously he worked with Alchemy Capital Management as a portfolio manager for offshore long-only strategies. He is an MBA from Symbiosis Institute, and also he is a chartered financial analyst. He has got over 22 years of experience, and he is basically an expert. So welcome, Mr. Chandraprakash, to the show.
Hi, Neeraj. Thank you so much for having me on this show today.
Wonderful. It's nice having you here, sir. So before we start, it's what we call the quick market round. I'd just like to understand, see, we hit the fantastic rally in April, May, and June, and then we have seen some correction. Whereas our small cap, mid cap, micro cap, they have been rallying harder and harder and harder. So how do you think the market is poised now? Is it that again for the rest of the year? Is it going to be correction is going to continue? So give us an overview on the market.
So we're starting with a very interesting topic, and which is the
Yeah.
market movements. And I must say that so this is actually I would just highlight that this rally for small cap specifically has been continuing from 2020 onwards.
Okay.
Uh, During COVID times itself, it started and it
Mm-hmm.
continues as we speak. There are a few reasons that I want to highlight, but the first among them, which is more important, is that if
Mm-hmm.
you notice, fundamental performance of companies in the manufacturing space is seeing a very sharp improvement, both from
Mm-hmm.
a top line increase, which is sales increase, and
Mm-hmm.
also on profit margin improvement.
Mm-hmm.
Uh, in fact, where the overall macro environment the way it is, and In many businesses, manufacturing costs relative to, let's say, a China, Indian companies have increasingly starting to become more competitive. And with geopolitics the way it is, where globally customers are preferring to diversify a bit from one single source supplier in the world, which is China, towards other
Hmm.
locations, I think India stands at a probably an inflection point actually. And we are seeing businesses benefiting from this trend, and we are seeing businesses growing and scaling up very fast. So one thought on small caps, and small caps by nature or by scale, and if you look at large cap, mid cap, small cap, the way businesses are allocated from market cap perspective, a large part of manufacturing in India,
Hmm.
manufacturing, logistics, supply chain is into small caps as a segment. So
Okay.
fundamentally, things are very strong. You also mentioned the very short-term performance, which is March, April, May, June, July. The recent few months, small caps have been going up almost every day, every week. This, I would
Yes.
say, is on the back of a lot of money uh, being or focused towards small cap as a segment. Whether it is mutual
Hmm.
fund small cap schemes, one of them that I manage, Tata Small Cap Fund, or insurance companies which are also launching dedicated small cap funds, or Flexike or diversified funds also looking to increase their allocation to small caps over the last 6 months. We are seeing uh, a specific focus towards buying more and more smaller size businesses. And I think
Hmm.
every investor that I see today is focused or kind of attracted towards the scaling up that manufacturing companies in India are seeing, not only now, but the next 3, 4, 5 years. So that is leading to a very sharp price improvement in a very short period of time.
Hmm.
On your last part of the question is in terms of how do we see things progressing going forward? Well, as of now, the momentum continues. Money is not stopping. Money continues to be very strong. Business fundamentals also remain strong. So my guess would be that the very near term, which is the next 3, 6 months, good times continue. We will have to see what lies beyond 6 months.
Hmm. And why is we are saying that Nifty and Bank Nifty is not performing that well in last 1.5 months, kind of. Whereas as we know that the small mid are railing, but why there's a diversion between two indices that we are seeing?
So I would take you to that year from where rally started in the overall market,
Okay.
which is 2018,
Mm-hmm.
and or early 19, let's say. If you look
Mm-hmm.
at from 19 to date, uh, large cap indices, which is Nifty, Sensex, the larger cap indices were the first of the block. They delivered
Mm-hmm.
very high performance, and
Correct.
small cap followed at a later date. As I said, small caps actually followed up from 2020 onwards.
Mm-hmm.
Uh, in fact, if you go to the data, late 18 and till 2023 till date, large cap indices are still outperforming the small cap indices. So in
Mm-hmm.
that sense, it is just a lead lag. First, large caps go up because that's where first money is attracted towards. And then when the
Mm-hmm.
rally continues, when people get more confidence and when smaller size businesses also start doing well, money starts moving down the curve as well. So, and this is typically what happens in a bull market. People are looking for options, investment options across market caps. As I said today, if you notice, if you look at the data, most diversified equity mutual funds, which
Mm-hmm.
used to be historically more in large cap and mid cap, we are noticing their exposure towards small caps as a percentage of overall allocation. There also, it is going higher, which tells you
Correct.
that there is this interest among investors to look at allocation towards small caps. My guess is, or my view is that, or I believe that it is because of the strong fundamentals that small caps
Mm-hmm.
can deliver from an earning growth perspective over the next 3, 5 years is what is attracting most investors in this segment. There is likely to be volatility going forward, but ultimately the trajectory is likely to be strong.
Wow. That sounds good, in fact. So, again, whenever we see in the past, there's a big small cap, mid cap rally, and after that, there's a phase of correction. And what we have seen, in fact, 2020 onwards, last, till April, we had seen a kind of a correction in the small cap. Now, as an investor, there are two strategy: buy and hold strategy. Of course, I can hold it for a long term, or second is active investing. Whenever I see that thing that now it's a time for rotation, and large caps, it's shifting towards large cap. So should I exit the small cap, shift to the large cap? So what strategy do you recommend? Buy and hold strategy for long term, or active investing, if we can call it, and shifting to
So
other
very
funds, large
relevant.
cap. Yeah,
So very, very relevant question for the day, Neeraj ji. And
yeah,
I would say that, or let me first talk about the positive, and then I'll come to the negatives
right,
on this subject. On the positive side, as I was saying, manufacturing both from an India demand. So, for example, look at auto ancillary as a space, where
correct.
auto ancillary as a space, as an example, where
Hmm,
India is quite scale in terms of scale perspective. We are among the top three automobile countries in the world. So we
hmm,
have size, we have scale, uh, and if you look at our auto ancillaries, we export something like 22 billion dollars a year, but we
hmm,
also
hmm.
import. In the historically, we've been a deficit economy even in auto ancillaries, where we used to import more than what we consumed, and we used to export. So we were a deficit in the sense that we used to import more, we used to export less, in spite of the fact that our cost competitiveness was quite good. Increasingly, what we are seeing, and this is just as an example, there are many other sectors where we are improving on this count. Uh, Increasingly, we are seeing like FY23, the last year, the deficit turned to surplus, which means that we
Okay.
exported more, we imported less. So what
Hmm,
we are seeing is incrementally in business after business, and let's take auto ancillary as an example again. Our view is that increasingly this Atmanirbhar Bharat, Make in India concept that the government has been talking about, we are seeing it as a reality where Indian companies are benefiting on two counts. One, gaining market share for India requirements, and also gaining market share on global sales. So
correct.
scalability is happening faster,
Hmm,
and it is more profitable as well in this kind of cycle. And in
hmm, hmm.
our opinion, this will continue for multiple years, actually, maybe the next 5-10 years. We are very small still in the global scheme of things. So taking this as an example, as I said, we are seeing this in many other sectors in our economy today, where scale up for businesses, both from domestic requirements, where we are substituting imports, and for
Mm-hmm.
exports or for other global requirements, we are gaining scale. And that is why, and small cap, as I said, is largely about manufacturing. And that is one big aspect to tell you that if you take a view on small cap for a long term perspective, which
Hmm,
is, let's say, a 5 to 10 year view, then
hmm,
I would say that it makes sense to continue to be optimistic and
mm-hmm,
remain invested for the long term. Maybe do SIP, systematic investment, monthly or quarterly, in whatever an investor
mm-hmm.
prefers. Having said this, you also make a good point, is that given that the rally has been such a sharp rally over the last couple of years, it typically in a bull market, even in a very heavy bull market like this, in the past, our experience have told us that it is never a straight line. It never goes straight way up every day, every month. There will
Right,
be corrections in between. There are times in the short term when excesses happen, where some businesses start trading at much higher valuation than what fundamentals deserve, and then it leads to some amount of correction. That correction is generally very healthy, and then it restarts as an upside cycle. Given the way markets have behaved in the way in the last 6 to 12 months, my or our view at Tata Mutual Fund is that uh, one should expect some amount of consolidation in the small cap space in the next 6 to 12 months, and
mm-hmm.
post which things can once again restart. So, if any of your investors or viewers has a short-term view, my recommendation would be to maybe be on a cautious side. Having
Okay.
said this, if the view is more medium to long term, which is 5 years plus, then a small cap as a segment continues to be very attractive.
Okay. So you mean to say for next 6 to 12 months, we can probably expect some kind of consolidation. There's correction, right? and
Yes.
then it is going to continue because the main theme is manufacturing, and where the small cap is good at. Now again, till the correction really starts, we'll wait. As a fund manager, you have been tracking small caps for a very long time. You know their behaviors, you know their characteristics, you know how do they react to different kind of situations. So can you tell us what are the signs that consolidation or corrections might start, or end of probably pause of the bull run? What are the signs that we should be looking for?
So typically, the first thing, and I'm making a lighter remark here, is that whenever my neighbor starts telling me that this stock is better
Okay.
than, or,
Right.
so I've started seeing those trends. In fact, there is this saying that in our market that अगर आपका पान वाला आपको बोलने लगे कि आप ये शेयर में क्यों नहीं लेते हो, that's typically a good sign that we are closer to consolidation or correction in the market. Well, on a serious note, I would say that uh, in incrementally today, when we
Mhm.
look at various businesses in the market, uh, there are many, and by the way, small caps are largely B2B, which is business to business. They
Correct.
largely they don't cater to directly to the consumer. They are not branded companies, so they are prone to business cycles. If their OEM, the customer, which is a large OEM customer, if they have a slowdown in their growth globally and in India, some amount of impact in B2B businesses will come in small caps. So small cap, given they are manufacturing companies, they are dependent on larger customers, and we are in a phase of the world where globally growth is slowing down. Economies in the world like US, like Europe, like China, we are seeing GDP growth slowing down. We are seeing this in our monthly data and trade data that India gives out. Exports are slowing down, imports are also slowing down faster. So data points do suggest that we are in a phase where globally economies are in a slowing phase, which means that some amount of impact on smaller size businesses, which appear largely in manufacturing, will also happen in even though we are very small in the overall scheme of things, we are only gaining market share, and we will still grow. But the expectations are when we meet, let's say, our investors or see in the last couple of years, small caps have given 25-30% CAGR returns.
Hmm.
Uh, and today, investor expectations are, are pretty high. When we meet our partners or some of the investors, my understanding or our anecdotal evidence that we have seems to suggest that people are expecting 20% plus return going forward as well. And which is where mistakes tend to happen.
Okay.
After a fairly long bull cycle, one will need to see some correction and this is quite healthy actually.
Hmm.
And my suggestion is that one needs to be slightly cautious today. For example, there are businesses which don't deserve to trade at more than 10, 15 time from a PE perspective. Whereas we are seeing the same businesses trading at 30, 40 times 1 year forward earnings perspective. So valuations have started to be stretched for some segments of the small cap market, and that tells me that it merits some caution today, rather than being very aggressive.
Hmm. Okay. So, okay, great. Now, we know that small cap investing is slightly more volatile than large cap. So, from a retail investor's perspective, you know what, we tend to get excited toward the later part of the rally. We always buy late, and then we get excited. When everybody gets excited, the retail investors also get excited, and by the time, as you said, you can ask a panwala, when everybody starts saying that small cap, small cap, small cap, that probably is a sign that we need to exit. So now the thing is that we cannot avoid that as well. So how much, as a retail investors, what should be my approach? How much of my portfolio that I should be putting in my small cap fund, number one? And should it be a lump sum, or it should be a kind of an SIP? So is it a time to still go for a lump sum investment? Of course, April could have been, March, April could have been a better month to put a lump sum, but can somebody still go for lump sum? in small cap, or and how much of one's portfolio should be given to small cap funds?
So Neeraj, yeah, good question. Actually, very relevant question for today's times. And I would say that I am in favor of doing only SIPs today, and
Okay.
also with the view of 5 years plus as a tenure. Any
Hmm.
investor who has a shorter term tenure, which is let's say the next 6 to 12 months, my advice would be please have as little exposure to small cap as possible. These are
Okay.
not times to put larger allocation in small caps. We are
Hmm.
seeing investor behaviors where people are putting more money in small caps, as I see. Whereas if you have a, and which is not wrong, but your investment horizon needs to be longer. If you think
Correct.
about 6 to 12 months, then my advice would be have lesser exposure to small caps. If you have a longer horizon, then you can put as much as you like, depending on the risk reward. So it depends on what time horizon you have and what your return expectation is. Just to put things in perspective, the reason I say this
Hmm.
is that today, at least, difficult to give numbers in terms of what returns we expect. But what I can say is that in today's market scenario, we believe large caps will probably give similar returns as small caps, which
Okay.
means in the short term, over the next 12, 18 months, we believe
Hmm.
large caps are similar from a risk reward perspective than small caps, which means
Hmm.
that if small caps are, as you rightly said, they are more volatile, they can go down more on a relative basis. If your returns are similar in large caps and small caps, then
Hmm.
why would I take more risk in small caps? That's one question for a shorter term horizon. And that
Hmm.
is why I'm saying that it may, for if you have a time horizon of 6 to 12 months, then better to have lesser exposure to small caps. But if you have a 5 year time horizon, then SIP one should continue SIP and can have a larger allocation as well.
Great, wonderful. Now, again, of course, as you said, yes, we need to have allocations towards our small caps. So there are multiple different funds are there. Of course, Tata Mutual Fund. I myself is an investor in your fund, small cap. And now the question is, there are different funds are there. So how do you choose? What are the parameters that you need to take into consideration while selecting the right funds? Can you throw some, give some guidance to our listeners, viewers?
So every fund house has their own investment philosophy. For example, at
Hmm.
Tata Mutual Fund, our investment philosophy is growth at reasonable price, where we look for companies which can grow earnings at a very fast pace, along with free cash, and businesses are available at a very attractive valuation, so that in our investment horizon, if those companies deliver earnings as we expect, then there is re-rating valuation possible. That's our investment philosophy. There are some mutual funds which adhere to pure value as deep value as their investment philosophy. There are some investors who prefer quality at any price as investment philosophy. So,
Hmm.
and the reason I say this, or I'm highlighting the investment philosophy as an important point to consider for investors, is that in any different economic environment, different investment philosophy works. For
Hmm.
example, between 2008 and 2020, for a very long time actually,
Hmm.
growth at any price worked beautifully well. In during
Growth
that
and
time,
yeah,
interest
yeah.
rates were closer to zero, and at
Correct.
0% interest rates, and generally economies were slow, businesses were slow. And if you notice in our economy, FMCG or consumer sector was doing extremely well, and they are high quality, so they continue to get re-rated for a prolonged period of time, and they were the best part of the market in that period. So if an
Hmm.
investor had a high allocation to consumer in their portfolio, they did very well. And some mutual funds in our industry had that philosophy of quality at any price, and they did extremely well. Whereas between 2018 and 2022, value did very well. When interest rates
Hmm.
started moving higher globally, the first that happened was quality started underperforming and value did very well. But value is one off. It goes up
Hmm.
and then there is no value then. And then value is one time re rating and then you stop. Since 2022, what we are seeing, or since 2018-19 actually, we are
Yeah.
seeing is when interest rates are more higher, growth at reasonable price, which is our philosophy, has been doing very well.
Hmm.
Because we are looking at growth and also looking at reasonable price or valuations, keeping one eye on valuations. So in the last 4 5 years, if you've noticed, Tata Mutual Fund funds are doing extremely well on a relative basis. One is our stock selection is done well, but I would say it is the philosophy and the economic environment where we are in, which is also
Mm-hmm.
helping the cause. So it is important for investors to choose in different environments what philosophy they want to focus on, and and within that, what fund managers. So they have to also choose fund management team, and their track record, past track records, and what is the average churn. That so there are ratios that one should look at, but philosophically, you should also look at what investment philosophy is working in what time, and which investment house is worth following during that time.
Correct. And in fact, we have started receiving questions from our viewers as well. In fact, would request our viewers that अगर आपका mind में कोई भी questions है with respect to small cap, please feel free. Go ahead, type your question in the chat box, and I would like to take this question to our guest today. So there's a Rohit Gupta. He's asking like, what is a threat? अगर no doubt we are in the middle of a bull run. So, Agar, what are the negatives of small cap investing, and what could be the threat for this bull run? That is a question from Mr. Rohit Gupta.
So there is no specific negatives. So okay, let me since he's asked a specific question, let me try and answer this.
Yeah.
It's an important question. So the first is that, as I said, small caps is all about largely about
Mm-hmm.
manufacturing, and these are all B2B companies, which is that they don't directly cater to customers; they cater to a larger customer who in turn caters to the direct customer.
Mm-hmm.
Uh, so, in that sense, if the larger business fee sees a slowdown, manufacturing activity for smaller companies will also see a slowdown. So, they are in that sense dependent on global economic environment. So,
Mm.
which means that if when you look at small cap investing or manufacturing as a segment, manufacturing, supply chain, logistics as a segment,
Mm.
you also have to have a view on how economic environment is both for India and globally. That's the first part. The second thing about small cap that I would highlight is that, generally speaking, given the smaller size, which is market cap between, let's say, our universe for Tata Small Cap Fund nowadays, given our fund size has grown, we are investing in companies between 2,000 crore and 17,000 crore. So there are a set
Okay.
of something like 500 to 550 companies to choose from. It's a large universe, but still in this universe, given the size of market cap is, let's say, between 2,000 and let's say average of 7 8,000 crore,
Mm-hmm.
when you look to buy 50 100 200 crore worth of shares in a particular 7 8,000 crore market cap, as you would calculate in your own mind, you need to buy 1 2 3% of that company, which
Mm.
means that you are buying a larger chunk of that company. You're trying to buy a larger chunk of that company, which typically means that illiquidity, and small caps are known for this, relatively relative to mid caps or large caps, small cap
Mm.
investing is illiquid in nature, which means that if a fund manager like me, if we buy a small cap stock, I cannot buy and sell very quickly, very often. I need to look at very
Mm-hmm.
long term. And in between, if there is a global slowdown or a correction, uh, if the team makes a mistake in identifying a company and we invest and that business doesn't deliver on earnings, the penalty for making a mistake is very high, because you are not
Mm.
easily able to hit that stock without an impact cost. So the impact cost is higher because of the illiquidity profile of small caps. So I would say that's one risk factor that one needs to consider. And lastly, in
Mm.
small caps, uh, most companies are not very well researched because these are
Mm.
smaller size businesses. So there is an opportunity also, because if not many people are researching is, you have an opportunity to research it and buy and make money. That's the positive side of it. But the negative side of it is that because these businesses are not very well known, uh, if you make mistakes, then it can be painful from an impact cost perspective, as I said. So these are some risks that I would want to highlight.
Mm. Is it AUM of the fund is also important? Is it an important factor to consider? Because bigger the AUM, if the AUM becomes very big, then probably, as you said, illiquidity is a problem in a small cap. They find it harder to find good ideas to invest. Is it true?
So historically, this point has been very valid. Yes, you are right. I believe that size matters a lot in
Hmm.
small cap investing. So the size of AUM does matter. Having said this, uh,
Hmm.
the environment today for Indian companies is such
Hmm.
that majority of manufacturing companies in India are seeing a tailwind for their businesses,
Hmm.
which means that you would notice that almost all manufacturing companies today are growing their business at a fast pace. So
Hmm.
when a larger universe is growing, even if you have more number of stocks, instead of impacting your performance negatively, it is actually impacting your performance positively. So
Correct. Mm.
in this environment, actually size has not impacted your performance negatively. Having said this,
Mm.
when valuations become expensive, so for example,
Mm.
what I mean to say is that between 2018 and 2022, generally valuations for small caps were fairly reasonable and attractive. In that period, the more number of stocks you had, the better your performance was. So size did not impact your performance materially. If you are larger in size, even better actually. Uh, Today, when valuations for many businesses have started to move higher, my personal perspective is that in the next 3 to 5 years, or maybe the next 12, 18 months, uh, size will matter because your ability
Mm.
to change your portfolio in these times. For example, at Tata Mutual Fund, in the
Hmm.
last 6 months, we are in the process of completely changing our portfolio.
Okay.
So we are, and we can do this because our size is not very large. We are still around 5,800 crore. So when your size is optimal, you can continue to change your portfolio, keeping in mind your view on the markets and your businesses over the next 3 5 years. Whereas if let's say I was a 20 30,000 crore fund size, then for me to change my portfolio in current times would be very difficult.
Mm.
So I think incrementally the next 2 3 years size will probably matter. That's my belief.
Okay, now nothing to worry. Now, another important question, like from the retail investors' perspective, what I do is that I go to the internet, look for return, which fund is giving higher return, highest return probably, and I tend to choose that fund. Now, as you said, that another thing is that in case of small cap, entry, exit, turnover ratio. So, is it the right way that the highest return, and what are the other two, three things that one need to look at? You said, of course, the philosophy also very important that you have already said. Any quick pointers to investors, retail investors, what they should need to look at?
So I would say I would actually once again mention investment philosophy is the most important thing to monitor actually,
Right.
which I don't see many people doing that, and hence I'm repeating this point that do
Hmm.
focus on the investment philosophy of individual fund houses and see whether in the current economic environment this investment philosophy makes sense or not. That's the most relevant thing. Apart from that, historical performance, not only 1 year. What I've noticed is that most investors tend to look at 1 to 2 years past performance and then take a view on a fund manager or a fund management team.
Hmm.
My view is that at least see 5 years, if not longer. Maybe 10 years, 10, 15 years is even better. The longer the
Mm.
track record you have and compare with for the same tenure with different teams. Because you need to see cycles for an individual fund manager or fund management team. And if in a 2 3 cycles, if the team has performed, then you can be
Mm.
fairly confident that even in the next few cycles they will perform. So it is
Correct.
the team performance over a long period of time is what matters, and not the immediate 12 months or 24 months.
Okay. Team performance and how they have performed in last few cycles. That is how. Okay, we started receiving some more questions from our viewers. I will take the last question first. This question is from Vikram Prabhu. So he's asking like index funds or flexicap versus multicap. Which one is best for a diversification and to invest for long term, say 20 years? अगर एक यंग बंदा है, मतलब यंग, मतलब just started his job and he want to invest for 20 years for his retirement probably, or for his so what kind of fund will you suggest, like flexi cap, multi cap, or based or small cap? What is your view on that?
So I would say all three options that you mentioned, and I'll probably add a few more options, so
Okay.
have a role to play. So index fund, uh, and largely the large cap index fund, which is BSE, Sensex, Nifty, dedicated
Uh-huh.
fund is what I would certainly have a part of allocation in my fund. A flexi cap, a multi cap, a large and mid cap as a combination fund, are each of them have a relevance in client's portfolio for a long term period. I think each have different allocations to different market segmentation. For example, FlexiCap, as by the name suggests, is FlexiCap to a fund manager to choose large, mid, small. So he'll probably have everything in your portfolio. Large and mid cap will have minimum 35% in large cap and mid cap at all times, and 30% will be flexi cap. Whereas a multi cap will have 25, 25, 25, 25% in large cap, mid cap, small cap at all times, and 25% will be flexi cap. So different market environment, different
Mhm.
kinds of funds will perform. But since the question is for 20 years, my sense is that all of these three, four categories that I mentioned should have some allocation in a individual investor's portfolio over the next
Mhm.
15, 20 years. And SIP is a very good way to do it.
SIP is the best way to do it. Correct. Again, Mr. Chandraprakash, before concluding, your final take and give us an overview as a retail investors. What is going to be your advice or approach, and as a whole, if you can sum up, it would be wonderful.
So as an overall, just to summarize our conversation, I would say that near term, which is the next 6, 12, 18 months, uh,
Hmm.
especially on the small cap segment, one needs to be a bit cautious. Uh,
Okay.
if you take a 3 to 5 year view, one at least I am quite optimistic. So if you take a medium to long term view, please continue to invest. Use SIP as your preferred mode to invest, and don't go for or let's say don't expect too much. Or let's say let me rephrase. In the last couple of years, returns have been very strong in the market generally. Both large cap, mid cap, small cap, everything has done well. Uh, in my experience of 23 years being in the market, the average return is typically closer to earning growth. For example, in the last 23 years of my career being in the market,
Hmm.
average profit growth in India has been around 14 to 15%. And that is exactly what your returns have been CAGR in the last 23 years. And hence, I would recommend that look at corporate earnings growth trajectory in our economy over long periods of time. My belief is that India GDP can certainly compound at around 10 to 12% in terms of nominal GDP. And
Hmm.
that is exactly what, on a conservative basis, earning growth can be over 10, 15 years, which is what your returns expectation should be on a conservative basis. So if and I my suggestion is that if you are coming in equity, compounding is what matters. So time in the market is more important than timing the market. So please look at the long term and remain invested for a very long period of time. Don't look at very short periods of time. And if at all corrections come, which are very healthy in the market, please use that time to maybe add to your allocation.
Wonderful. It's a wonderful talking to you, Mr. Chandraprakash. I think our viewers, we got lots of insight as to what should be our approach towards small cap. Of course, there are so much of excitement, and we retail traders tend to get carried away by the excitement in the market. So that we don't get carried away, as Mr. Chandraprakash says, that yes, correction, watch out, and take this opportunity to add. And SIP is the best way. If you're a long-term investor, and investing for long term, SIP is a better way to invest in the small cap sector. With that, sir, thank you so much, and thank you to our viewers as well. Thank you so much. It's a nice session, and with that, I'd like to say thank you. Bye bye.
Thank you.